Just want to do a quick update about where mortgage rates are headed, especially now that we have renewed activity in the Strait of Hormuz. So a couple of weeks ago, I had mentioned in a video that mortgage rates had not gone down significantly because after the peace deal had got signed. I said this was because mortgage rates are actually based on the bond market. The bond market is based on investors who are buying and selling these things. They're not looking at the activity of that day and they're not making up a price at willy nilly. They're looking for kind of a trend. And what we saw when the peace deal got signed, you saw oil prices dropped, but mortgage rates stayed the same. That's because the bond market didn't believe the deal was going to hold up and didn't want to risk issuing a bunch of bonds or mortgage backed securities at rates that would end up being below market by the time they went to trade them. That's exactly what ended up happening, and that's why rates barely changed initially when the activities heated back up again, and they've crept up a very tiny amount, but really we're in the same range that we've been in the last year or so. Kind of expect that to be the new norm for a while until things in the Middle East calm down permanently and for a long time. You're just not going to see the mortgage world really change that much. You're going to see oil prices go up and down quite a bit based on the news, though. So if you have questions about that, just ask them below or shoot me a DM. If you know somebody that's in the market for a new home loan, go ahead and forward this video so they can understand what's happening. Be back at it with some product and knowledge stuff for the rest of the week. I'll talk to you folks later.